Well, the markets are open. We are joined now by Dewey Strickler of AgWatch Market Advisors in Franklin, Kentucky, to talk about our market action. And again, a reminder, in case you missed it, in our first half hour, we had an overnight export sale, this time of corn. And this time, the amount was 115,800 tons. It went to unknown destinations. It was all for the old crop. Let's see how the corn is opening up this morning. Did it help the cause or not? We were down roughly about a nickel overnight. Well, no. It's par for the course these days when you get an export sale report coming out overnight, and it seems like more often than not, the market reacts negatively. We have July corn down 5 1/4 now at 313 1/4. Now 313 even. That's down 5 1/2. And new crop December currently down 4 3/4 at 332 this morning. On the soybean trade, let's take a look at the July contract. Wow, down 15 1/4 this morning at 834 1/4. In November, down 14 at 841 per bushel. What happened to all that talk about China buying a whole bunch of soybeans? It seems like that's all gone. Soybean meal, we have the July contract down $3.60. We're at $288.90 per ton. In the soybean oil market, as we get things rolling today, we have July down 58 points at 25.92. In the quest to find a plus sign here, we go to wheat, and we have July Chicago wheat down 6 1/4 cents at 510 1/4. In the let's go to Kansas City wheat. On July Kansas City wheat, we're down 4 1/2 at 478 1/2. In the Minneapolis wheat, this is how we're opening. We have July down 4 1/4 this morning at 502 1/2. About cotton, are there any plus signs there? No. July cotton down 156 points this morning at 54.28. Let's go to Dewey Strickler. Dewey, I haven't found a plus sign yet this morning. What does that tell you?
Well, last week we had the Trump administration and China were pointing fingers at one another about, the blame and the handling of the coronavirus and so forth. And you know what you got here, Marlon? You got traders are just simply tired of the drama. They want to see this thing get passed. It doesn't look like it's going to pass here for a while. So that said, they're just getting out of the market and just staying out until they see things begin to improve here. We don't have any type of weather premium, either the corn nor the soybeans, and we generally do get a little recovery going into mid-May, but it doesn't look like we have any visible signs of that. So, that said, trade is just not really interested in the grains here right now. They're putting it aside till all of the drama and show is over.
All right, Dewey, I think I may have found it while you were talking there. I think I found a plus sign for you. Let's take a look. And this morning, it would be in the oats market of all things. Now, why is oats trading contrary to all the other grains? We have July oats up 2 3/4 at 289 this morning, almost on the high of the day. Now, the old saying is oats knows. What the heck would it know this morning here, Dewey? That's kind of intriguing.
Well, I tell you, as long as I've been in the business, the trade does look at the oats. And, one thing about it is that oats is probably one of the markets in the grains that can be most fundamentally traded here. So that said, maybe, in the weeks ahead, we will get some of this behind us here. You do not have the spec volume in oats like you do in the other grains here. So that says something right there.
Historically, it can kind of tend to maybe lead the corn market sometimes. And if you look at that chart that we just had up, boy, it's been a steady climb for a better part of, looks like since maybe the 1st of April. So we'll have to keep an eye on that one. Okay, thank you, Dewey. We'll come back in a moment. We'll open up our livestock trade right after this. We are talking with Dewey Strickler of AgWatch Market Advisors in Franklin, Kentucky. Let's open up our livestock trade. On the grains, it was hard to find anything that was on the plus side until we finally came across the oats. They were. Well, on the live cattle, we're higher across the board. Whole different story here. You have your June contract now gaining $1.45. We're at 88.70 this morning. And you have August 82 cents higher at 93.37 on the feeder cattle market. We currently have the May up $1.02 at 118.85 per hundred. We have August 77 higher at 128.42. This is how we're opening our lean hog markets. Well, remember, we're in expanded limits today, and the May contract is using it. They are up 387 this morning at 66.75, make it 66.80 now. We're up 392. The June, though, only up 60 at 63.30, and the deferreds are steady to weaker. So let's start off by looking at this cattle trade here. Everything higher on the cattle complex this morning. Dewey, how come?
Well, when you look at the cutout, we're looking at record highs here in the cutout trade. I think, what was it last week? It got up to 377.45, so that's given, I think, cattle most of its support. You do have a pretty decent discount to the cash markets here, so I think that's pretty well the reasons we're looking at firmer markets.
Are you optimistic they have based out now?
Well, I don't know that we've bottomed out here yet. My big question is, when you're looking at cutout values where they are, who's going to be able to afford to eat a steak?
Good question. All right, let's look at the lean hog and the lean hog market and how they're situated. That's been a pretty steady climb here for the last 3 weeks or so. So how stable is this market at this point?
I think the hog market is overbought. The hog market, in my opinion, I think we do have a bottom end, but I think when looking at the June hogs, we're probably $9 to $10 overpriced just right now, and that's based on the cutout values.
Of course, we were talking earlier about the weakness in the Dow. It's down 262 points. Is that going to be a factor in the ag trade here?
I don't think it will be in the grains. I think it very well could be a factor in the meats, however.
What about the dollar value as it stands? Because I see this morning where it's actually firming up a little bit. We're up about 380 points.
Yeah, the dollar is firmer, and I do look for the dollar to stay firm here for a while. But I think, with what we've seen as far as with the coronavirus and so forth, and all the money that's been pumped into here, the economy, I think you're looking at a threat to the dollar down the road.
Thank you, Dewey. Dewey Strickler of AgWatch Market Advisors in Franklin, Kentucky. Janet, that is how we are opening up today's ag trade.